This is Inside WealthTech. I'm Blake Wood.
And I'm Aaron Bauer from InvestNet.
And we're live at Schwab Impact with Tyler Porterfield, SVP Head of Platforms for Franklin Templeton. Tyler, thanks for stopping by today.
Guys, it is a pleasure. I am a dues-paying member of both of your fan clubs, so I'm happy to be here.
That's why you're invited. So Tyler, what do you see as being the biggest shift in wealth tech right now? And how is Franklin Templeton helping advisors or investors address those?
So it's going to be tough to pick one. I'm going to break my own rule right off the bat and use a buzzword or a buzz term and say the greatest macro shift right now, the biggest trend is customization at scale. I think that you hear that a lot, and that can mean different things to different people, but it's something that we are focusing so much time and attention and resource on because we really think that that is leading to better, smarter portfolios for our end clients.
So as we think about the biggest disconnect that you see between an institutionally managed portfolio and those capabilities and actually delivering an experience, a platform experience for the advisors and the families that are getting these portfolios delivered to them, how can that gap be closed?
The biggest gap probably is in the philosophy, the mindset, the approach to portfolio construction. When we talk to our institutional clients, they start with their capital market expectations at a very high level, and then they start working down to, okay, if I have X expectation out of equity broadly, then how do I want to balance that across different subcategories of equity? And then finally, how much of that equity needs to be liquid on a daily basis versus where can I get more illiquidity premium if I know I don't need to build? And so they're starting with their equity exposure and then thinking through how much of it would be, to use retail terminology, public markets versus alternative equity, private equity. I think that retail financial advisors don't think in those terms nearly as much. They think through, all right, I have my base portfolio of public markets, daily liquid investments, and that's the core, and then I can complement that with peripheral exposure to illiquid alternatives. And I think that we're seeing a little bit of a mind shift towards that much more institutional approach of identifying what's the balance between illiquidity benefit and premium versus liquidity needs for the clients. And so that's something that we're trying to build more tools around helping them model out what those exposures are.
We hear a lot of demand and a lot of need for help to advisors because it is a different type of muscle than they've been using in the past. So it's great to hear. I think it'll be really really fit the need. So moving on to platforms, we've seen model portfolios, TAMPs, multi-asset solutions proliferate in the market. How should advisors evaluate platforms to make sure that they're advisor-centric rather than product-driven? Because they're getting talked to about products all the time. Some may be somewhat self-serving, and advisors need to determine what works best for them.
100% true. So, and Aaron, you probably know this better than me, but I think that any time that you're evaluating a tool to be used as a component of your business that has a cost profile associated with it, it's crucially important to make sure that what you're paying for is what you actually need. That if it's a TAMP platform, if it's a model marketplace, that they're providing the tools that are actually going to be useful for your business, and that you're subscribing to it in a way that you're not paying for something that you don't need to. I think that we're going to see a decent amount of consolidation in this space. And so I think that solvency and long-term relevancy are factors that don't show up as well on a listing of the different services that a platform provides, but something that advisors need to think about in terms of not having to go back and replicate this whole diligencing work at some point in the near future as well.
So you had mentioned illiquid portfolios or illiquid positions in portfolios. At InvestNet, we talk a lot about personalization of portfolios. Advisors want to think that technology is going to fix all their scale problems, but oftentimes we're introducing complexities to that. How do you think about delivering scale to advisors without adding friction to the process?
Yeah. And if we can solve for that, I think that we're doing the industry a big service. I would say historically there has been an either-or relationship between scale and efficiency. And technology has allowed us to let that Venn diagram overlap a bit. And so you can execute on more efficient scale. You can execute on the customization of the client portfolio without it being at the detriment of being able to scale your business in an effective, both a cost-effective and a time-effective manner. So we think about like our Canvas custom indexing platform and the way that you can build hyper-personalized client portfolios in a really scaled fashion that does not, ratchet up the amount of like rote execution and individual like human being work that needs to go into having those type of personalized portfolios. And historically, the hyper-personalized portfolio was the domain of the ultra high net worth investor. And now it has been democratized to be in the domain of the mass affluent investor, because you don't need to hit those types of minimums to be able to justify that level of personality.
Shift to all of our favorite topics, regulation. So regulations continue to evolve, continue to become more challenging, invasive, for the good, with good intent. And that kind of puts on additional demands on platforms. What are you seeing as the role of platforms as they evolve from just investment access to operational and regulatory partner?
Yeah, well, so I think the first part of the answer to that question, Aaron, goes back to the comment we made about understanding the platform, the TAMP, the model marketplace that you're subscribing to, and that it's actually fitting the needs you have without even overstepping that too. But I think that a lot of advisors are naturally, as they think through that cost-benefit analysis, understanding that there's a lot that it's more efficient to outsource, whether that's investment due diligence, operational due diligence, suitability oversight, thinking through like order flow management for SMAs. These are a lot of things that advisors understand can be tail risk to their business if not done appropriately, and making sure that the entities that you're partnering with are able to do that in a really effective way so that they can take some of that liability off of you.
So if we continue to look forward, what platform capability, whether niche or emerging, do you think will kind of be baseline expectations for advisors for the next 3 to 5 years?
We're in it right now, and I think it's only going to keep getting bigger, but the ability to manage around illiquidity profiles of strategies, the ability to take something that trades on a non-daily fair, that has a limited trade window, and be able to efficiently build it into client portfolios and rebalance around it in an effective manner. I think that is going from like a new novel concept to what will soon be table stakes in a matter of just a couple of years. And maybe to extend that even a little further, Blake, I think that the next leg of that is going to be further expanding the investable universe to get more underlying investment exposures that have really low or no correlation to public markets, equity and fixed income, and be able to blend that in. If that's blockchain enabled physical assets, if it's intellectual property that you can tokenize and then you can then weave in, if it's, we're seeing it obviously with some of these like spot coin ETPs that have come out that are easy to work in as well. People are very quickly coming up to speed on the diversification of benefits and what that does to the efficient frontier of portfolios to keep expanding the investable universe and really efficiently weave it into existing sort of traditional public markets portfolios too.
I know we're working together a lot on trying to solve for that in the near term and continuing to have conversations about what that's going to look like longer term. Change it up a little bit. Whether it be work related or otherwise, what are you reading or watching that you would recommend to others?
I'm sure there's everybody's sick of getting television show suggestions, so I'm going to stay well clear of that. I'm also conscientious of the rules of this industry. If somebody asks you what you're reading, what book to recommend, like you got to stick to like presidential biographies or something Warren Buffett related. I'm going to go off script on this one.
All right.
I reread a book this summer that I gained an additional appreciation for. It's a fiction book, it's a science book called The Short History of Nearly Everything by Bill Bryson. It's like 25 years old probably,
Yep.
But for being a science read, it's fascinating and it's also really accessible to non-scientists too. So that's the type of book that I think we need to sort of mix up our reading schedule around.
I dig it.
Can't
I
wait
do
to
have
try
that
it.
one on the shelf.
Yeah.
I'll have to go back to it.
Yeah, well, and I look forward to getting the trails.
All right, so we'll shift into kind of the last segment here, our lightning round or speed round, if you will. First question around AI's role in portfolios. Do you see this as being as fully outsourced autopilot investing or more augmented intelligence?
Probably both. And in the spirit of the speed round, I'm going to keep the answers really quick for you.
Phenomenal. Direct indexing. Future of personalization or too complex for most advisors?
Oh, that's an easy one. Future for sure. In fact, I would even say not complex enough for a lot of advisors. I think that there's a lot of evolution and additional sophistication benefits to come under the broader umbrella of direct indexing.
In the next decade, what are clients going to value more, personalization or performance?
This one, I'm gonna put my personal bias to performance aside, and I think, speaking for the broader industry, personalization for sure.
What do you think is the most important measure of success? Advisor adoption, client satisfaction, or efficiency gains?
There's a virtuous cycle across all three of those for sure. You have to start with client satisfaction, because that is going to have a positive feedback loop to more advisor adoption, which is then going to create more efficiency gains for all parties.
Last question of the lightning round. The biggest integration barrier, legacy technology or siloed data?
Boy, that might be a tie. You save the toughest one for last. They're both tough. I would also say like legacy thinking too. There's a
Fair
breaking
point.
through that silo is going to be very tough.
Fantastic.
Well, thank you, Tyler. This is Tyler Porterfield, SVP, Head of Platform at Franklin Templeton.
Favorite part of the day so far, guys. Really appreciate it.
Thanks for coming. Thanks, Tyler.
Absolutely. Take care.